It said we were 30K fair value back when we pumped all the way to 69. Look, we always go above fair value in crypto fall. At the opening, you were talking about the seasons. And look, I didn't make this up. I've observed it. I focus on it, but it's not my thing. But the idea that somehow the 4-year cycle is going to go away just doesn't make any sense to me. It's hard coded into Bitcoin's program, and that's the halving. And so what happens is the halving occurs, and if the price didn't move, what would happen? Most of the miners would go out of business. Think about it. Their electricity costs are fixed, their machine costs are fixed. And so if suddenly the block rewards get cut in half, if the price doesn't adjust, some of them have to go out of business.
Mark Yusko, an experienced investor and CEO of Morgan Creek Capital Management, has consistently championed Bitcoin. He frequently shares insights into its value and potential. In a recent conversation with Scott Melker, several intriguing points about Bitcoin's trajectory and the overall cryptocurrency market emerged. Yusko emphasized Bitcoin's remarkable journey, witnessing a growth from zero to an astonishing $850 billion market cap in just 15 years. Stressing the significance of understanding the asset's cyclical nature, he pointed out that Bitcoin's value tends to follow a 4-year cycle, largely influenced by its halving events. These cycles exhibit periods of rapid growth followed by significant corrections. One key aspect Yusko discussed is the concept of fair value in Bitcoin pricing. He contends that Bitcoin's fair value currently resides in the low $50,000 range, a prediction supported by models like Metcalfe's law. This law correlates the value of a network with the number of its users. According to Yusko, as Bitcoin approaches this fair value, it attracts not only investors but also traders, speculators, and eventually gamblers, leading to a parabolic rise in price. Now, let's delve into the details in the video.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
So what we have seen in each of the previous cycles is the price doubles. That makes sense. That doubling is a fair value doubling. But what happens is if something goes up a lot quickly, what happens? People get stupid. They start to tumble in. And the way to think about it is after the collapse, right? We all know the crypto winters. So winter is when we have the collapse. And what is a collapse? A collapse is where we fall from craziness, euphoria, back to fair value, but we don't stop at fair value. This is the way bear markets work in any asset. We go right through fair value and we go to washed out levels where no one will ever buy commodities again. No one will ever buy NVIDIA again. No one will ever buy Bitcoin again. Yeah, whatever. And I actually remember being on TV December 2018. We were at 3,200. And the host on CNBC says, don't you think it's going away? Like, no. In fact, we just issued the Morgan Creek Digital Bitcoin Challenge, and we challenged anyone to take the other side. $1 million charity bet like the hedge fund bet with Buffett. I actually even called Warren, and he picked up the phone, and we talked, and he decided not to do it. But we actually had a dialogue back and forth for about a week. Wow. But we couldn't get anybody to take the other side. They take the S&P. We take Bitcoin for the next decade. We got one guy who said he would take it, and his son talked him out of it. But because he was in the asset management business, the son was like, look, there's no upside for us. If we lose, it's bad. If we win, who cares? We're supposed to win. So no one would take it. Now, it's a good thing they didn't, because Bitcoin has crushed the S&P over the last 5 years. I mean, it's not close. But the point is, in crypto, when we go down to this crazy level, and fair value at that time was around $11,000. So at $3,000, really easy to say, you should buy this. And what investors do, they buy things below fair value. Investing, capital I investing, is about buying things below fair value. Okay, that's the idea. But then you start to creep. So then we get out of crypto winter and we go to crypto spring. Now, crypto spring is not boing, V-shaped bottom, everything's going back. Spring is wet, nasty, and windy and cold, and it's kind of like just you're bouncing along the bottom, a little bit of, but that's when you accumulate well below fair value. Then we get to crypto summer. Now we're in crypto summer right now. We started
Nice.
Crypto Summer in June. We'll be in Crypto Summer till right after the halving next June. And what is Crypto Summer? Well, Crypto Summer is where we slowly accrete back to fair value. And what have we done, right? We got washed out, right? We had crypto spring, and then we got a nor'easter, right? We got Hurricane Sam, idiot comes in and washes us down from 25 all the way down to 15.6. And remember, people were like, it's over. It's over. Told you it was a scam. What's interesting is Crypto Summer, we accrete back to fair value. And from that bottom, from that washed out Hurricane Sam bottom, what have we done? Higher highs and higher lows. It's the most beautiful accumulation pattern you have ever seen. And that is investors buying below fair value. Now, when we get to fair value at 50, what's going to happen? The halving is going to occur. Well, then what happens? Well, we add a zero. So if you go back to the first halving, we went from 10 to 100. Then we went from 100 to 1,000. Then we went from 1,000 to 10,000. Now we're going to go from 10,000 to 100,000. That's a 10x growth of the network. Again, following this Metcalfe's law curve, that is a beautiful, beautiful accumulation pattern. I mean, it's just absolutely stunning. And when this occurs, and it's also an amazing cup and handle pattern, if you look at it over a little longer scale, I mean, beautiful. And all of this says that the investors are buying. But as we approach fair value, what happens? The traders come in. And we've seen that a little bit now. The traders are coming. Traders aren't bad. Traders just don't give a crap about what they're buying. They just want movement, and they'll buy, they'll sell, they'll trade. I'm not very good at it. I don't really do it. I'm a boring value guy. I like to buy things below fair value and hold them. That's easy. I'm not a very good trader. But then what happens as you start to get above fair value, as we enter into crypto fall next June, then we'll start to get above fair value. Now we'll go from that 50 to 100. And that 50 to 100, it's probably going to happen really fast. Why do I say that? Two reasons. One, that's what history tells us, that FOMO kicks in. But this time we got a massive tailwind. Last time we had GBTC. About $10 billion came into GBTC. We went from 10 to 60 really fast. Then Elon, put out the famous quote, went from 60 to 30 in a heartbeat. And then we went back to 69 because Michael Saylor bailed us out. Well, this time, if fair value is at 50 and we're going to 100, that 50 to 100 candle, I think it's going to be fast. In fact, I even wore my green pants today for the green candle.
Looking ahead, Yusko envisions significant growth for Bitcoin, foreseeing its potential to reach approximately $100,000 to $150,000 in the next cycle. This expectation gains support from the potential approval of a Bitcoin ETF, which could usher in a substantial influx of institutional funds into the cryptocurrency. Additionally, Yusko delved into the broader implications of blockchain technology and the innovations it could bring in the coming decades. Despite recent volatility that briefly saw Bitcoin's price dip below $41,000, causing a stir in the crypto markets with $500 million in liquidations and the sale of around 40,000 Bitcoin worth over $1.6 billion, Yusko's perspective suggests that such fluctuations are integral to Bitcoin's larger cycle. He believes they may even present opportunities for accumulation and long-term growth.
With the spot, everyone's like, everyone's going to front run it. No. When I buy the ETF in my UBS Family Harmony account, right? I have this Family Harmony account with my brother-in-law at UBS. I'm not allowed to buy anything the day the ETF is approved. I can transfer money into it. That's real money that then they have to do They have to create a new share. They have to buy spot Bitcoin. Now, here's the problem. Three-quarters of the coins haven't sold in a year. They haven't traded. We have $8 billion of trading volume every single day. It's the same Bitcoin over and over and over, like a tumbler. A washing machine, not a tumbler like a hider. But the key is that the price is going to rise because the demand is going to exceed supply. That's simple Econ 101. It could be a big move because 10 billion from GBTC plus Saylor, singing his praises, moved us from 10 to 60 in about 10 weeks. Now we had the the end of crypto fall, the Thanksgiving pump, all that good stuff. Okay, great. But this is different. This is real demand that I think could stretch. Look, I think it's going to be 300 billion before all is said and done. That's 1% of the assets held in UBS, Merrill Lynch, all these places that aren't allowed, right? It's crazy. Like if you're Merrill Lynch, not only can you not buy GBTC, they won't even take you as a client if you made your money in crypto. We went from zero.
Take your time.
15 years ago. 15 years ago, we had 15th birthday here in January, kind of week before the approval. And 15 years from zero to $850 billion of value. How did it do that? Not in a straight line. Up, down, up. But every high is higher and every low is lower. And every low is higher. And that is an accumulation. There are now hundreds of millions of people. Eventually, there will be billions of people that use this asset. And what's really fun, and I'll leave you with this thought, right? I've been talking about this forever. The cycle of 54 with the mainframe, 68 with the microchip, 82 with the personal computer, 96 with the internet, 2010 with the mobile net, 2024 is the truth net. It hadn't even started. The cycle that we're all going to be excited about, and it's going to go for 14 years, hasn't even started. The tech evolves and then gets ready to blast off. And from 2024 to 2028 is going to be like 96 to 00. Now, then there's a bust, and then we'll have the pets.com moment, and everybody will give up. And, someone, maybe Mark Andreessen or maybe this Mark, will say, all those ideas were right. I'm just quoting Mark Andreessen from 2001. All those ideas were right. Pets.com, Webvan, they're just early.
Right.
And guess what?
I think that's what
we have Chewy, and it took 20 years, but that's okay. We got a long time, and this is going to be here for a long, long time. And the other person who has their birthday on the 8th, along with Elvis, is my son. So my son turns 13, and his present will be the Bitcoin ETF.
Cathie Wood's ARK Invest executed its largest sale in over a year on Monday, selling approximately $12.85 million worth of Grayscale Bitcoin Trust shares from its next-generation Internet ARKW exchange-traded fund. The sale amounted to 395,000 GBTC shares, reducing the fund's holdings to around $12.7 million worth of GBTC, constituting a 6.95% weight. ARK aims to ensure that individual holdings in its ETFs do not exceed a 10% weight of the fund's total market value. Grayscale's Bitcoin investment vehicle saw an 8.6% drop to $32.45 on Monday, reflecting the 5.8% decline in the value of the largest cryptocurrency by market value. Grayscale is looking to convert the Bitcoin Trust into a spot Bitcoin ETF in January, with the U.S. Securities and Exchange Commission set to make a decision along with 13 other firms in the early new year. In addition to the GBTC sale, ARK Invest also sold $1.88 million worth of Coinbase shares on Monday, following the sale of over $100 million of the stock the previous week. Binance and Binance.US, represented by Changpeng Zhao, argued in a recent filing that the SEC did not meet the requirements of the Howey test in its lawsuit against them. They claimed the SEC failed to demonstrate contractual obligations to users, suggesting there was no investment contract as required by the Howey test. This marks the latest attempt to dismiss the lawsuit filed by the SEC in June, alleging that Binance and Binance.US allowed the public to trade unregistered securities. Share your thoughts on these developments in the comments section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.